morning, everyone. On behalf of Idara Securities India Private Limited, I would like to welcome you all for Q3 and 9-month FY24 post-result conference call of Himatsingka Seide Limited. Today we have with us the senior management of the company, including Mr. Shrikant Himatsingka, Executive Vice Chairman and Managing Director, Mr. Sankarnarayanan M., President Finance and Group CFO, and Mrs. Shilpa Shanbag, Vice President Strategic Finance. I would now like to hand over the call to Mr. Shrikant Himatsingka for opening remarks, post which we will take the Q&A session. Thank you, and over to you, sir.
Hi, good evening, everyone. On behalf of Himatsingka, I'd like to welcome you all to our earnings call this evening. I'll just take you through a brief business update and then open the floor to Q&A. I'm presuming that all of you have gone through the numbers that have come out. So our Q3 FY24 operating performance continued to demonstrate progressive improvement YOY on the back of improved capacity utilizations, softening raw material costs, and marginal easing of energy costs. During the quarter, our capacity utilization levels were the same as last quarter, largely in line with what stood during the last quarter, where our spinning division was at 99%. Our sheeting division came in at 67%, and our Terital division was at 67% as well. We continue to see a stable demand environment and remain focused on expanding our global client base, channel presence, and market presence. Key raw material prices were stable during the quarter and thereby contributed to improved operating margins year on year. With the launch of our Himaya brand, we now operate 2 brands in India, and we see India as a major market for home textile products and over the next 5 years. On the debt front, the company's net debt was range-bound and stood at 2,626 crores versus 2,579 crores at the end of last quarter. So this is a quick business update. I'll be happy to take any questions and queries that you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rusmik Oza from 9 Rays Equi Research. Please go ahead.
Thanks for the opportunity. Am I audible?
Yes, you are.
Yeah. Thanks, sir. So I just wanted to know, in the last quarter, 2 of your larger peers have reported healthy volume growth of one has reported 26%, others reported 36% growth in volumes, whereas our revenue has degrown by 3% on a year-on-year basis. If you can provide some reasoning for that, sir. And my second question is, we have been at the 67% utilization for some time now. By when do you think, as a company, we can reach optimum utilization, say, of 85-90% in the future?
Well, to the first part of your question, actually our manufacturing throughput has been up YOY. it's. I'll get back to you offline. Give me the numbers. I'll get back to you offline as to how much. But the volumes on the manufacturing front have grown YOY. Some of our other product categories that were earlier traded, and I'd shared with stakeholders that we have ceased such operations as they don't sync with our model going forward. So, yes, on a consolidated basis, there's been a slight degrowth on revenues YOY. But on the manufacturing front, there's actually been an increase in utilization YOY. So that's my response on the first part of your question. And on the second part, that's what we have focused on as we speak. We are now consolidating our operating performance over this 3 quarters of this fiscal after a bumpy ride last year. And, going forward, as I've shared with you all earlier, it will be our endeavor to look at enhancing utilization levels as soon as possible. So we are scanning, opportunities to enhance our client base, which we are doing, our geographical presence, which we are also doing. We've announced our foray into India a couple of months ago. We think India is going to be a strong emerging market for us. So I think with all these initiatives, we will see an uptick on that piece as well. I wouldn't want to put a timeline to it, but I would assume that it will be in the near future.
Okay. So my next question is, we have put a notice for raising around 400 crores by way of QIP. If you could just give us what is the purpose of this fundraise and where it will be deployed?
Yes, we've disclosed to the exchanges our intent to seek approval from shareholders to be able to raise and issue securities for up to 400 crores. So it's an enabling resolution that we have taken from the board and will take from the shareholders. The objectives of such issuance, whenever it does happen, is to essentially deleverage, and there will be some portions of the issuance that could potentially go into other corporate purposes. And that's been outlined in our releases as well. Okay. But primarily, will it be to repay debt or for expansion? Just a clarification. If the company were to do a issuance of securities, the purpose of it is largely to deleverage. Thank you, sir. I'll come back in the queue.
Thank you very much. The next question is from the line of Narendra from Robo Capital. Please go ahead.
Hello.
Yeah. Yes, we can hear you.
Yeah. Hi, thanks for the opportunity. So my first question would be regarding our Himatsingka brand. So what kind of revenues is it doing and what are the margins on it? If you could provide some ballpark numbers about that would be helpful.
So we've just launched the brand, Narendra, a couple of months ago. So it's too early to share any numbers, but we have put out in public domain what we intend to achieve from India over the next 5 years. We think the theme of domestic consumption is a strong theme, And with the launch of Himaya, we will have two brands in India. One Himaya and the other is Atmosphere. Atmosphere operates in the drapery and upholstery space. Himaya operates in the bedding and bath space. And in addition to this, there are private label opportunities as well in the Indian jurisdiction. And so we will be looking at, all of these areas and growing India in the years to come. As far as margins are concerned, I've been asked this query before. We feel that what we do with the Himaya brand or the Atmosphere brand for that matter at stable state will not be decretive in any form to our EBITDA profile. So the margin profile on an EBITDA level that we expect to earn from these brands at stable state will be comparable to where we are today, in the 18 to 22% range. Okay, good to know. And we have been seeing stable margins over the past 3 quarters. So is it safe to say that these are the kinds of margins that we could see going ahead in a stable state situation? So would that be fair to say? I've always said that, depending on product mix and, other parameters, our EBITDA margins historically have been range bound between 18 and 22%. And that's the kind of bracket that we have that's the kind of band that we have shared with stakeholders, in terms of where we feel comfortable to be at as an EBITDA band. Okay, got it. And what would be your outlook on debt, on your debt levels? So I think thematically speaking, we've been sharing with stakeholders for a few quarters now that we are wanting to sort of focus on deleveraging, and that's precisely what we are trying to do. At this point, YOY, our leverage levels are slightly below what it was last year during this period. And, initiatives that we've announced and so on are all sort of headed in the same direction of deleveraging. So as a theme, that's something that's on our priority list, and we will be focused on that. Okay. Thank you so much, and all the best. Thank you.
Thank you very much. The next question is from the line of Prerna Jhunjhunwala from Elara Securities Private Limited. Please go ahead.
Thank you. So I just wanted to understand the demand scenario in on the global platform, and what is leading to increasing focus on India market, because you mentioned private label opportunities also here in India. Just wanted to understand the global opportunity as well as India opportunity for you.
Well, I think the global opportunity and its scope is fairly well defined now over the years as an industry. So, the Americas, the UK and European region, EMEA, if you will, and Asia Pacific, Middle East and Asia Pacific, the size of these markets and the scope that they have is fairly well established in terms of broad numbers. So nothing changes on that front. I think the industry continues to consolidate, and I think that opportunities will continue to be available to players from India and to us going forward. So that will sort of play out. Our India piece is largely being driven by a substantial emerging opportunity within our country. And, Himatsingka was not present in the form and shape that it should have been. And so we didn't want to miss the bus on, being present in India. and being part of the growth journey on the domestic of domestic consumption as it plays out. So it will work as part of our as an extension of our current strategy of expanding markets. India happens to be another market, and will serve to de-risk revenue streams from Western jurisdictions.
Okay, understood. And sir, could you also explain us the sensitivity of raw materials price movement going forward? What is your outlook on cotton, and how do you see these 21% kind of margins sustainable based on your inventory procurement strategy?
Well, I mean, at this point, what I see on the cotton front is largely stable, Prerna. I have no specific data or evidence to suggest anything otherwise. Having said that, it's a commodity and, it's subject to fluctuation. Our EBITDA margin profile, as I've shared with stakeholders, has been range bound to 18 to 22%, depending on the quarter and product mix and so on and so forth. Of course, there could be exceptions to this in extreme cases of volatility, but other than that, it's largely range bound in this sort of band. So my views on that remain the same. And as far as cotton is concerned, it's stable. There is no macroeconomic or cotton-specific data that's out there in public domain or otherwise, which makes me believe that there is going to be a lot of volatility or swing in prices of cotton. But as I said, it's a commodity. It is, it can swing in either direction. But I think it's been stable now for a while, and we hope that it remains range bound. It's bound to move, but hopefully it's range bound.
Okay. Do you think there will be any changes in the cotton procurement policy because prices are at near MSP levels this year?
Yes, selectively, there won't be any substantial change in policy. But as part of our policy, we, in the ordinary course of business, take, views on cotton, depending on the varietal of cotton. And so that's something that we would anyway do in the ordinary course. But it could, as I said, your views on raw material can swing either way. So within the confines of our policy and the frameworks that we operate in, we do take such views from time to time and will continue to do so. But I don't see any substantial change in our internal policies or anything of that nature. It will be dependent on, varietals of cotton. There are various kinds of cotton. There are various grades of cotton. And so it has to be a more granular, let's say, de-risking initiative or hedging initiative, if you will, which anyway plays out in the ordinary course.
Sorry, I should rephrase the question. I was wanting to check if you will be buying more cotton this year because they are available at lower prices or near MSP levels.
As I said, that's what it is today for certain varietals. It's not for varietals across the board.
Okay.
So at this point, for certain varietals where we feel there is a value proposition and we feel that, we can take a slightly longer view on that particular varietal, we'll do so as we would have in the ordinary course of business. Because in the ordinary course, if there are prices that prevail, below MSP or, in that region, and we think it's a good time to pick up a little more, we would. But nothing else changes, for us from a policy standpoint.
Okay, understood, sir. I have 2 more questions. I'll come back in the question queue. Thank you.
Thank you.
Thank you very much. The next question is from the line of Manish Dhariwal from Fiardus Capital Advisors Limited. Please go ahead.
Yeah, very good afternoon. Am I audible?
Yes, sir.
Yeah, so first I would just like to clarify the name of my company. It's called Fiducia Capital. Fiducia being trust. Yeah, it's okay. Yeah. Okay, so I would first compliment the the management and the promoter team for setting up a fantastic business, and we've had some you would say some issues in the past because of the change in the prices and COVID, etc. But yes, it's a fantastic business that you set up, sir. So my compliments to you on that. Now, so having said that, so now one question is that you've been attacking the element of debt, which basically is hurting the balance sheet at this point of time. So, but I note that our cost of debt is like continuing at about 75 odd crores a quarter. So while we are making cash flows, so how is it that you are trying to tackle this element in the business?
Manish, the answer is simple. We had finished a capex pre-COVID, which was pretty substantial, and post-COVID, we have come a long way, but we have also witnessed some volatility. We are of the opinion that we need to deleverage. That's something that we want to prioritize, and we're working on. Our models, our plants are indeed world-class, industry-leading in many cases. Our capacities are of global scale. Our know-how is deep. Our track record is nearing 40 years. Our brand portfolio is strong. The promoter track record is strong. We need to work on deleveraging, which we have transparently shared with stakeholders. That's something we are doing, and that's something that those initiatives will have a direct impact on the numbers that you just mentioned in terms of our interest outgo per quarter. So that's how we are looking at it.
Also, that's been a very qualitative answer, which actually I already know about the business, right? That it's a high quality business. But some numbers would have really helped. Because 75 crores hitting on the P&L every quarter, it basically kills all the good work being done.
Yeah, so that is emanating from, so why don't I do this, Manish, instead of going granular into numerical analysis, I'll take this offline with you, and, me and my team will be happy to take you through the numbers and explain to you, to your satisfaction on these fronts.
So I would love that. I, in fact, tried in the past, but then, I wasn't really very successful to connect with the team at your organization.
Try immediately after this conference call, and we'll be happy to address it.
So what number do I try on, sir? I'm sorry I'm asking these questions, but then, I really try to kind of
Dial our landline, 22378000. Request to be connected to the group CFO. And right after this call is done, within 10 minutes, we will be on the line with you to explain this to you.
So that would be wonderful, sir. So my second question was, so that how much is our atmosphere business on an annual or a quarterly basis in India?
Atmosphere, it's a small brand at this point because it's a luxury brand. And
I know.
It's operating in luxury price points, but that's something that we will be changing going forward. So right now the business is probably in the 20-25 crore region as a brand.
Okay. But sir, in fact, if you ask me, it's an extremely timely decision that, the organization has taken about looking at India in a very strong manner. And Himatsingka brand and the atmosphere policy I think it's very timely, and it's 100% going to bring results. So absolutely, meaning I really kind of align with this policy. So my next question was, so on this, say if the RM cost goes up, right, the cotton, as you very rightly mentioned, that nobody controls it, right? It's a commodity. So, and we are actually at the upper level of our EBITDA band, which is like say 21, 20, you've been mentioning 18 to 22. So suppose if the RM cost goes up tomorrow, how much will my EBITDA come down?
Manish, that depends.
No, we don't know when it's going to happen. See, again, I'm not asking you that now you please, tell me as to when that's going to happen. I'm not asking that. My question is, it's simple number crunching. Like, that if my RM cost goes up by, say, 1%, how much impact will be on my EBITDA? So because we are sensitive to RM costs.
On a thumb rule basis, my guess is that for every percent, I mean, don't hold me to this, but if I were to just framework for you an approach, not just for, I mean, just generally speaking as an industry, thumb rules, right? As my personal view on how one can sort of framework this is probably, hold on 1 second. About 25 basis points, 20 to 25 basis points per percentage point of inflation, broadly speaking.
Okay. So basically, like the RM cost goes up by 1%, EBITDA gets hit by 25 basis. All right?
Yeah. I mean, look, it could vary. It could go outside that framework.
Right. I understand. Absolutely. That is understood.
Help your understanding and, put it in perspective. Yeah.
I understand that, sir. And so lastly, sir, how many months inventory do we keep, sir, of cotton, typically, in a normal business practice?
How many months of cotton does one hold?
Yeah.
Approximately a quarter, thereabouts.
Quarter would be like 3 months, right?
That's right. It could be lower than that. It depends on varietals.
Absolutely. At a broad number.
We are somewhere in that range.
Wonderful. Thank you, sir, and I look forward to the conversation. We'll just pass to the
Thank you very much.
Thank you so much, and all the very best. I will do that, sir. Thank you.
Thank you very much. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Rusmik Oza from 9 Rays Equity Research. Please go ahead.
Yeah, so my question was pertaining to this deleveraging only. If I add up the 9 months profit and the depreciation, the cash profit annualized is coming to roughly around 400 crores, and 300 crores, and if we use 400 crores of QIP and say retire debt of around 650-700 crores, my question was, we have long-term debt which is roughly around 1,600 crores, short-term is 1120 crores or so, and I presume that the average cost of debt is around 5.5-6%, but there could be some working capital loans which could be at high interest rates. So is it fair to assume that a bulk of the repayment will go in for the little longer interest cost, and how much could that savings in interest work out to, say, in terms of percentage?
Rusmik, so broadly your construct of total debt plus minus 100 crores is fine. The only thing is, to the best of my knowledge, there is no debt available at 5.5%, at least to us. So the average cost of debt is higher than that. That's my one feedback. And the other is that, as we've stated in the objectives and have put forth in public domain, our object, largely, if and when we were to do an issuance, the purpose of such issuance will be largely to deleverage. And if we were to largely deleverage, using issuance proceeds and internal accruals, as per your example, then the savings that will accrue to the company will be at a higher rate than you just mentioned, and will be largely towards, term debt.
Okay. So will it be in the range of 8 to 10% or so, cost of borrowings?
I think that's a fair assumption to make in today's interest rate environment, right?
Okay, thanks, sir. Thank you so much.
Yeah.
Thank you very much. The next question is from the line of Nihar Shah from Crown Capital. Please go ahead.
Hello, good evening, team. I just have one question on our revenue. Like, what kind of revenue are we expecting to close on this year?
Neeraj, unfortunately, we don't give guidances of that nature, and we've had a stable 3 quarters, YOY. Last year was very volatile for reasons that we've shared, largely owing to extreme levels of inflation and destocking initiatives that were undertaken by global clientele last year. So we are sort of stabilizing once again, largely stable performances across the quarters, and we hope to remain focused on such sort of themes of performance.
Okay, and also, do we have any capex plans going ahead?
No, Neeraj, we don't have any specific capex plans other than what we've already disclosed, and that is our maintenance/organic capex that typically is between 60 to 80 crores per year. At this particular point in time, we have no other capexes that we have in mind. If there is something that comes up, then we will disclose that to stakeholders. But at this point, we intend to remain within the framework of our maintenance and organics capex requirements only.
Okay, sir. All the best. Thank you.
Thank you.
Thank you very much. The next question is from the line of Prerna Jhunjhunwala from Elara Securities Private Limited. Please go ahead.
Thank you. So just wanted some color on the brands that we are having in our portfolio. How is their performance, and how is the private label or private label performance in our key markets?
Prerna, that will be quite a long-drawn sort of explanation, and it's pretty nuanced. So feel free to call us and we'll take you through.
Okay, sir. Thank you. That was it. Thank you.
Thank you.
Thank you very much. As there are no further questions, I now hand the conference over to management for closing comments.
So thank you all very much for taking your precious time this afternoon to join us for this call. I hope I've thrown light and answered some of your queries and questions. Do feel free to reach out to us should you need anything more, and we will answer them to the best of our ability. Thank you again, and catch up next quarter. Thank you.